While the market is chasing hype, Amazon and Google are quietly building an AI mode that is virtually unshakable for 2026. If you missed the first AI wave, these are the giants that are about to catch the second one. Today I'm revealing the exact entry levels and price targets alongside the company's fundamentals that prove as to why 2026 belongs to these two tech giants. So without further ado, let's get into the data. Now, first of all, let's talk about the AI infrastructure play. Both of these companies are currently in a massive capex cycle, spending record billions of dollars to build out the physical foundation of the next decade of computing. Now, we're starting with Amazon. They have the silicon advantage. With their scalable Trainium and inferential chips, they are offered and projected to see a 4 times higher performance rate and lower cost by around 40% here. This would allow Amazon to offer AI compute cheaper than anyone else while maintaining their top tier margins. Additionally, from the latest earnings report, they have a $200 billion backlog, which is massive multi-year contracts which would provide revenue visibility through 2029. As well, with the operational leverage play here, they have logistics automation. If Amazon is able to automate menial tasks and tasks that are repetitive, this would allow for margin expansion over time and should follow with the stock price. We also have to acknowledge the advertising gold mine, which is the fastest growing segment for Amazon, seeing a 24% year-over-year growth, and this does offer high intent data, which is making Amazon's ad space more valuable. As well, one of the main theses for Amazon's growth is going to be AWS projected acceleration. The last earnings call, we did see it reach around 20%, and analysts are expected to see a 22% increase in AWS over the next earnings reports. This would indicate that the company is scaling overall. As well, it's reducing its costs and increasing its revenue, which does have the operational leverage. But we would like to see AWS grow, especially as we see in Azure and Google take market share and seeing very fast growth rates, especially Google. Now, let's transition towards Google, which is a vertical AI leader. This company possesses everything from the full stack, having the hardware and the software. Now, Alphabet does own the data, the models, and the chips, like I said. They represent the most vertically integrated AI company in the world. Now, many investors have said that AI has disrupted search, right? That ChatGPT was going to disrupt Google, but this has actually been proven wrong by the increases in search volume as well as the revenue in search for Google in the latest earnings report. They do report 650 million monthly active users, and ad insertion is going to start in 2026, which is another way to monetize these AI models. And like I said, search revenue grew 15% in late 2025 despite the bearish sentiment. Now, even transitioning towards the cloud inflection point, there's been a profitability surge for Google Cloud, which it transitioned from being a cost center to a high margin engine, with operating margins now scaling towards 25%. 2 years ago, they were barely being profitable, which just shows the scale of this company. Now, they have a $155 billion backlog, and is roughly a 50% of that being converted within the next 24 months, providing a significant growth cushion for Alphabet's non-search revenue. Now, they're also looking to monetize other bets with the rise of Waymo, right? Waymo has been transitioning its revenue business and is actually commercializing it and expanding into major cities, which is forcing analysts to value Waymo as part of Alphabet now. And there is estimated that the actual value of the company can be in the multi-billions, and is actually scaling. The unit economics and safety does lead to this mass adoption that we're seeing, right? So there is the bullish case and the bearish case. Many analysts are comparing it to Robotaxi, but Waymo is way ahead of Robotaxi, right? With Waymo being fully autonomous, and we have Robotaxi with Tesla still having that driver assistance and having that person in the passenger. We have to acknowledge that Google is a data company, and they are only going to get more efficient over time. They're only going to get more efficient over time by providing that value of AI integration into Waymo. Now, my bull case targets for Amazon, I do have the company valued at $315 per share. I do believe that that is what the company should be trading at right now at this moment, and it is heavily discounted, trading at around $200 per share here, and this would be based on around $3 trillion market cap. Now, for Google, I do see $375 the valuation of Google. We did see that sell off at the beginning of the year, but it's actually reverting back to its mean, and anything below 375 here should actually be bought here on Alphabet. Now, before we dive into it, I want to remind you guys of our Patreon membership, which is a 7-day free trial. And in this subscription, you get exclusive access to our Ticketflow AI app, which accesses full entry to AI-led trades and gives you alpha, as well to our top 3 high alpha trades of the week sent every single Sunday, which gives our subscribers immense returns. So as you can see, we're currently on an Amazon hourly chart, and every single indicator here on our custom algorithm is telling us that the trend is going to be bullish and that the stock should be bought. But more primarily, we would like to get above this area of key resistance that we have been underneath for quite a while here, this $230 zone. Now, if I zoom in towards the chart here, this anchored VWAP is from the swing high, so pretty much from the selling or the initiation of the downtrend, which is, what we want to acknowledge, right? We want to see if these sellers are still in control, and they still are. So what I would really like to see here on Amazon, even though we are getting every single candle and every single indication here that the trend is bullish across all time frames, which is very important of this multi-time frame confluence, what I would like to see over the next couple of sessions would be something like this. So I'd like to see the stock finally break above this area, maybe come back and test it, and then initiate obviously the new higher highs and higher lows, which do characterize an upward momentum trend, right? And then over time, we would see the anchored VWAP slowly start to curl towards the upside following the price action. And the exact entry points would be around the pullback zones, just like this one. Or you can even enter at a deeper correction, even though if it doesn't touch it, getting in at the levels of where the price action pulls back is always going to offer the best risk adjusted returns, because you're going not only with the trend, but you're entering at a moment where the momentum is finally starting to curl towards the upside, which is very, very important, especially for these entries. Looking here at the potential for the stock and where it has to go over the next couple of trading sessions, I do still remain my longer term $315 price target here on Amazon. But looking here at the exact levels, I do believe that Amazon can go to 284 over the next couple of sessions if this does play out here with this thesis here on Amazon. As well, what we really want to acknowledge here is that looking at the RSI, we are kind of finding a base here. So we are finding some level of support here at around this level of 48, and showing that there is some leveling off, that there is some buyer interest in this name. And looking particularly, let's say, towards now the daily chart here on Amazon, it's been bullish this whole year, right? It's been holding well above this key area and indicator, and it's been buying every single time it dips to this 200 EMA. It dips and buys, it just comes in, and especially many buyers are just getting this name at a discount every single time we dip, right? So we even formed a higher low here at 221, which does offer that initiation towards the upside here on Amazon. Now, transitioning towards Google chart, here we are on an hourly. We see that Google has just been having an outstanding performance year to date. The stock is up 60% and has driven such amazing returns for investors at the lows of 145. Now, looking here at the actual custom algorithm that we built, every single indication shows that we are in a bullish trend phase, and that's exactly what's been happening, right? So it's very important to have the bullishness being priced in and factored across multiple time frames, whether it be the 5-minute, 15-minute, etc., even the longer term times, which do have that more importance. But right now, what we're seeing in Amazon, I should say Google here, is we are seeing an anchored VWAP pinch. So we're seeing a compression of price. We find buyers at the low, we sell at the highs, and generally what this tends to mean here is that we're kind of just digesting such moves that we've been seeing, right? We've been seeing such intense moves, right? From, let's say, from 283 all the way here, 15% move in just 6 days. That's just phenomenal. And what we're seeing right now is the digestion of that action through time, right? So I do still sustain my upward momentum here on Google. Same thing for the upside. I like to see that break above the resistance. And like I said, I would like to see that higher momentum, higher lows formation, and slowly start to see that anchored VWAP start to curl up towards the upside. I still am sustaining my longer term price target here on Google, but I do see the stock trading towards 350 over the short term. And a perfect entry would be, like I said here, break above 313, 90, which would be this swing high anchored VWAP. The entries would be around this general zone, and it would go towards 350 here, but I do remain my longer term price target here on Google. And there you have it, the bull case for Amazon and Google for 2026. While the market is currently distracted by short-term volatility, the data shows that these two giants are fundamentally repricing the entire AI landscape. Whether it's AWS Trainium chips lowering the costs, or Waymo scaling to 1 million rides, the infrastructure is already in place. What do you think? Let me know in the comment sections below your price targets for both of these companies. And if you want me to analyze more companies, let me know down in the comment section below. Give this video a like. And remember, don't let the markets whip you guys out. I'll see you guys on the next one.